Hello, welcome back. I'm with Rick van Nieuwenhausen. Rick, good to see you.
Good to see you again.
Obviously, Contango ORE, just really brief update or overview to start things off.
Yeah, so Contango's in Alaska. We have a joint venture with Kinross. Our project is called Mancho. It's a 1 million ounce, 8 gram per ton deposit. It's a fantastic grade open pit. We partnered with Kinross because they have a mill that's underutilized at the Fort Knox facility. Yep. And so we're going to mine the ore at Mancho and process it at Fort Knox. And we're at the stage now where we're actually mining and we're stockpiling ore, and hopefully in about a month here we'll start transporting the ore up to the Fort Knox mill to stockpile it up there. And then early next year we should be processing ore and pouring gold. So it's an exciting time of the process.
This for those who aren't familiar with the story, let's take a step back, I guess, and talk a little bit about the JV with Kinross, how that works, obviously how the truck into Fort Knox is going to look like as well, and I think just a bit more of context around that relationship.
Sure. So we found a deposit, Contango found a deposit on land owned by the Tetlin tribe. We advanced the project to sort of a pre-feasibility level of study, and it's a nice quality deposit. It's very high grade at 8 grams open pit.
Is that the highest?
It'll be one of the highest grade open pit gold mines in the world, yeah. But it's not large. It's 1 million ounces is not an insignificant amount of gold, but it's not huge, and it's a relatively remote location in terms of not in terms of road infrastructure, but in terms of power. Right. And so when we looked at the alternative of developing the mine ourselves versus partnering with somebody who already has a mill who has been in operation for 25 years, it just seemed to make more sense to pursue that. Plus, Kinross was open to the idea, obviously, and they had excess capacity at the mill. It is a long truck ride up the road to the mill. It's 240 miles, 400 kilometers. So,
but in a way, because it's such high grade, that sort of negates some of the price risk there.
So yeah, you're basically, it's costing you more. I think about it in terms of grade. It cost me about 1.3 grams of 8 grams to haul it just for the truck haul. Yeah. But the offset is I don't have to build a mill, I don't have to capitalize a mill, I don't have to permit a mill and a tailings facility and a power plant. Those are all big things to, not only from a capital standpoint, but also just from a time standpoint. Yeah. I think, realistically speaking, it would take 5 years to permit a new tailings facility. Yeah. And the air quality permit is also a significant permit that you have to get. So this was a much quicker path. We did have to give up a significant percentage of the project to accomplish it, but we got to production that much quicker and for a lot lower capital. Something that was more realistic for our size of company to be able to raise. So we've done all that now. We've raised the debt, we've raised the equity. As I said, we're mining, so we're the last little step here, the last milestone is actual production through the mill, and that'll start early next year. So we're exciting time again.
Well, obviously, you're talking about, you've given a bit away, 70%, you retain 30% interest at the project level. But in terms of the economics of this mine, in your portion, your 30%, how does that look when you actually?
Yeah, so we'll, on average, it's a 4.5 year mine life. On average, we'll produce 67,500 ounces of gold a year for our 30% share. Our all-in sustaining costs are $1,116 per ounce, as per the feasibility study. Yep. That includes the tolling arrangement with Fort Knox, includes the truck transport and the royalties, there are underlying royalties to the tribe, and to Royal Gold, who was our former business partner. So that's it's a respectable all-in sustaining cost. At today's gold price, it's about an $800 margin. Yeah. And so cash flow wise, free cash flow should be in excess of $50 million per year. Good. So it's a very robust project. Now we have less than 10 million shares outstanding. So that's $5 of free cash flow per share. That's I don't know of any other junior company that has anywhere close to that. So, we'll be in a really good position to not only advance our own projects or other projects that we own 100% of, but to look at other opportunities that are out there. And Because we all know this is a tough market right now.
Well, exactly, and I guess given it is such a tough market in the equity space, having that much free cash flow, you're going to be in a pretty good opportunity to look at some deals, right?
Yeah, we'll be opportunistic. I mean, face it, with a low share count, a relatively strong share price, and a good amount of cash flow, that's the sort of ideal prescription to become a hunter and not the hunted.
Exactly. Yeah.
So we want to pace ourselves here. There's lots of opportunities. One of the reasons we're here is to look at other opportunities that are around us, but we're also mainly here to meet new investors. Because I still think not a lot of people know this story.
Yeah.
It's a relatively young story. It was operated as virtually a private company for a good part of its life. So there's still a lot of marketing effort needed to just get the story out and make people aware of what a good opportunity and what a good investment opportunity this is. Yeah. To get in at the early stages of I think what's going to be a very good growth company. Good.
Obviously, from your commitments to the project now, you've raised the debt, you've raised a bit of equity earlier this year. Is that it now for Contango? It's obviously Kinross are the operators. So, what in terms of on the project level, and is there anything more that you really need to do before you can sort of go into production next year and get that cash flow? Is there any more next steps, or are you now in a pretty ideal position where you've pretty much completed the job?
I think for Mancho, we're it's not quite 100% done, but
yeah.
As you say, Kinross is. I say they're doing all the heavy lifting, and we have the equity and the debt raised to be able to make the cash calls. We're getting to we're I think about 75-80% complete at the mining project, okay. And they're about 50-60% complete at the mill modifications that they have to make at Fort Knox, which are more tanks and piping. It's nothing exotic.
Okay.
So yeah, I mean, I think our production path is pretty well set. We have the money to participate in the cash calls, so it really leaves us free to do what we do best, which is explore.
Yep.
Which we're doing on our Lucky Shot project.
Yeah, let's talk about Lucky Shot, because obviously it's very high grade, but needs room for growth, right? So obviously I understand you've had to focus on the operating project or the project soon to be operating. Does the focus now switch to Lucky Shot, and maybe you could just tell us a little bit about that asset?
Yeah, so in terms of our efforts, our exploration efforts certainly changed now from raising money to spending it, which at Lucky Shot. Now last year we were able to get the underground access put into underneath the Lucky Shot historic workings, and we got a little bit of drilling done. But as you say, once we knew we needed to raise all the money for Mancho, we had all the permits in place and everything was all go. We need to focus on getting the money ready for that. So now that that's done, we get back to exploring Lucky Shot. Currently we're doing a little bit of exploration work on the surface from the top of the mountain. We're trying to get a few holes in before the winter comes, and it's coming quickly, so we'll probably get some work done, and then we'll probably revisit it probably in the summertime when the weather's a little nicer. And then a little longer term, once we see cash flow, we'll get back to exploring from underground. We've got a 15,000 meter drill program outlined that we want to get accomplished.
Amazing.
But we're going to pace ourselves here, and again, first thing is make sure we get Mancho into production and cash flowing. That gives us a lot of time to look at new opportunities and to plan out our program at Lucky Shot. So
on the BD side, obviously now that we are looking at some pretty serious cash flow moving forward, and you mentioned that you're here looking at projects as well as talking to investors. What type of projects are you looking for? Does it remain gold? Does it remain North America or Alaska focused, or what are you open to?
I think quality is the main thing. We have two high quality assets. I think it makes we want to stick to things that are quality, things that are advanced, and that are sort of right size for us. I mean, I love exploration, but going out and finding a big porphyry that's going to cost $100 million to just explore, that's a big ticket. So those aren't the kind of things that we're going to focus on. It's going to be more the not necessarily small, but things that are more $10 million, $20 million of exploration gets you to a decision point. So that's kind of the focus for the kinds of opportunities that we're looking at.
Brilliant. And I guess just to wrap things up, are there any key milestones or any key things that investors should be looking out for over the next 6-12 months?
Yeah, I think the news at Mancho, the next big milestone is production, and that'll come in as a sort of test batches and then commercial announcement of that we're commercial now, and we'll have exploration results at Lucky Shot, but it'll be modest because we just want to get the surface program done, and the real meat and potatoes will come when we go back underground.
And just, I guess, when are you expecting first cash flow as well? I guess that's something that investors are always asking you.
Yeah, Kinross's guidance has always been second half of 2022. We think it's going to happen a little earlier.
2024?
Oh, sorry, 2024.
Yep.
I think it'll happen a little earlier than the second half. So I'm looking forward to more of a second quarter. I think we'll be looking at cash flows. Now, we'll need to put money into the working capital into the joint venture. And then
as you ramp up.
That's sort of the first thing as you ramp up. And then we'll have sort of true free cash flow, I think, by the second half. So.
Awesome. Rick, thank you for your time.
Pleasure.